Good day. Ira Epstein of Linn Associates with your agriculture update for this Monday, the 25th of March, 2019, as we're just getting close to 5 p.m. Central Daylight Time. I'll start with the weekly area chart of closes, but before I get there, I want to remind you, this coming Friday, we have the USDA stocks report and planting intentions. Now, I don't know how the planting intentions are really going to come out and work because of all the flooding that we're getting. Parts of Iowa have already been declared disaster area by the president, and we'll see what the USDA is going to do to help the farmers in those areas. We get flooding, as you probably can imagine, on a regular basis, but it was unusual this year, and there's more to come because North Dakota still has frozen ground and snow on the ground. When that melts, you're going to get further runoff, so we're concerned about that. But in the meantime, you can see the market is fighting at the 18-week moving average, which is the red number. When the market was here at 925, it slipped back under, and for a while now, it's been fighting against that. When we take a look at the daily chart, you can see how the market came off these lows, developed some sideways action, and the pattern is now one of higher lows and a higher high. The trend is up right now unless you take out 899.25, which would break the pattern then to a higher high and a lower low. You don't have that though. Where the support seems to be coming in is the 18-day average of closes. On the way up, it was resistance. I think you can see that right here. And that's what I look for, that number to be important. In other words, where a market tries to figure out what to do something from. Then it pulled back, and when it made the higher high here, it changed its character. Now it's got higher lows, higher highs, and it's still working on that type of pattern. When we take a look at the Bollinger Band, I have pretty strong resistance. Doesn't mean you can't blast through it, but it's strong. At the 917, 917.75 number, the combination of the Bollinger Band top and the 100-day average. Near-term support, 904.5. Even if you take out 899.25, unless you first go up through today's high and then drop through that, and that's the only thing that can turn it, you'd have then a higher high, lower low. So the bulls have at this point the upper hand. In terms of momentum, you are not overbought. The market is still pointing higher with the momentum. In the meal market, we're in an area where the market's got the 100-day average as near-term support, resistance, the upper Bollinger Band, in an overbought condition. Now, overbought resolves itself in one of two ways. Certainly, prices can drop and correct it and take these numbers back under the 70 level is what it would require, or the market keeps these numbers over the 80 level, and if you take a look at Friday, it didn't have that. Today's the first day, and it's got to do it for several days in a row. Then I'll say the market is converted from being overbought to embedded, locked in terms of upside momentum until that red line slips back under 80. Right now, you're in the middle of no man's land in the term. While you're in an uptrend, you've hit upside targets and you're stalling. Soybean oil is the lost sister of the group. It still has lower highs, lower lows. It seems to be the market nobody wants. On rallies, I would expect layers of resistance first at the 29.30, possibly the 18-day average of closes. Until you lose the red line when it gets on a close over 20, I think the market's continuing to be sold. In the corn market, the trend is up, higher lows, higher highs, but running into resistance right where it should, the upper Bollinger Band. Remember the theory of Bollinger Bands. The markets trade within them 95% of the time. Now, some markets do a heck of a better job than others. The hog market, we had 6 days in a row recently outside of it. So a sign of unusual strength, but more times than not, take off the name of the chart, it'll act more like this, staying within those bands. Let's assume you get through 380.75. You might make a run for the 100-day average. The problem for the market is it's overbought and not embedding, not even in the first stage. In the wheat market, we still have an uptrend, higher lows, higher highs, that so far hasn't hit the upper Bollinger Band. I'm sure the bulls are waiting to see if that can happen. You are right now in this market overbought. Both numbers are not over 80, so just an overbought condition. In the sugar market, you've broken out to the downside. Now the question is, can the momentum continue down there? You've got the lower highs, lower lows. The lower Bollinger Band is a possible target. So is these areas right here in the 1220s. That could be a support. Resistance is back at now right what you're on. If you take a look at today's close, you close 1248, one tick over the 18-day average of closes, which means even though it's one tick, the bias is up, the trend is down on the swing line, and momentum's trying to go down. This market needs to get under today's lows to give the bears some courage. In the coffee market, this is called running the lower Bollinger Band. More times than not, this occurs when you have an embedded reading. You don't have that right here, so I'm suspect of it, all right? That doesn't mean that it can't push lower, but it's having a heck of a time closing under that band, as you can see. It is working its way lower. It had a higher close today, so the intraday drops are there. Be a bit cautious. Oversold conditions correct one of two ways. They embed or they correct. More times than not, they correct. In the cocoa market, late day rally here. The market had opened about steady and then had a good rally. The high of the recent resistance has been 22.45. We'll see if the market gets there. Look what's waiting for it, though. The upper Bollinger Band on the 100-day average. Let's assume it gets over 22.45. You'd still have no trend because you got a lower low then and a higher high. For the bears to wrestle back command of the market, they need to close under the 18-day average, and you already corrected the oversold condition. Both numbers are already that make up momentum over 30. In the cotton market, this is a bullish market. It still is trying to do what? If we look at the slow stochastics, both numbers over 80, both over 80, and both over 80. Today was your third day of it. So even though you're at the upper Bollinger Band, I would be expecting to see support at that 100-day average of closes until you lose the embedded reading by the red line closing under 80. In the cattle market, the cattle had a bearish cattle on feed, but probably more important was it was overbought, had an outside day down on Friday, and if you're going to follow through and take this low out of 122.37, you put into play the possibility, doesn't mean you'll go there, of the 100-day average for the market to get its legs back under it. Tell me where you want. Remember what we talked, that 18-day average is often where the market neutralizes itself. It's like a pinball machine. You shake it too much, you're out of the uptrend, you go tilt, and it goes back to that number. Now it's waiting for something to develop. In the feeder cattle, I'm concerned that you broke down here and momentum's pointing down. So while the trend is up with higher lows, higher highs, you got 1, 2, 3, 4 days in a row over the upper Bollinger Band. The odds of it being 5 in a row is 1%, and today you got a bit of a correction. Will it get back to the 18-day average? I would hope so because it's so overbought. I don't see the pros stepping in. Here's the market that ran rather dramatically. Now, we know why it ran so hard over it. China's been buying pork from the U.S. And now the market's in a distribution area right up here. You have the embedded reading. I realize it's up like this, but there's no reason to be bearish. You've had a bullish crossover where the 18-day average got over the 100. That's often accompanied by another thrust to the upside. You had it. Now you're getting a little bit of distribution. You know, one of the things that I told you I was going to do now was start writing reports or videotaping. And I've decided to videotape. Writing's too hard. I can do so much more and teach you so much more in my video report. So I did a special report on gold. I'm probably going to do another one this week on currencies for you. And then by Friday, I hope to have ag coming up. So we're going to do that. Another thing I might do. I bought some more equipment for myself so that early in the morning or late at night, if I want to go home and throw together the equivalent of a morning's videos, I can do them for my subscribers. So I'm looking to do a little bit more. I realize my plate is full, but I enjoy it. So if you're looking for this information, all you need to do is go to our website, www.iraepstein.com. Under the word education, you'll see the drop-down menu. The special reports that I've got up at this point will be there. Click them, there'll be videos, and away you go. I'm Ira Epstein. You have a good day. I'll see you tomorrow.